In a debt fund, you're gonna get, the investors are gonna receive a 1098, and they're gonna pay taxes based on that income. Now, if they personally have other deductions they can write off against that interest income, they do that. If not, then at least they're happy with the cash flow and they're gonna pay some taxes. People who are in their IRAs, they love this, and we have like amazing amount of money from IRA accounts. And what we do, by the way, when we tell somebody, look, you need to get up to 250,000 to get 8%, we allow them to say, I have 100,000 from my IRA, I have 150,000, my husband and I, or my wife and I. And then now we say, okay, so you guys together, between the IRA and this, you have the 250. So we're gonna pay you 8% in both. And a lot of people like that in their IRA, they say, you know what, you don't have to pay me that. And the IRA money, I wanna reinvest it. So you as a fund manager, you're getting the money and you don't have to do payouts. You can actually send them the statement. You're gonna send them a statement that says you invested this. You invested, let's say, 1 million. You're supposed to get 80,000, well, so 40,000 every 6 months. So you get 40, but since you're reinvesting it, now you have 1,040,000. And now they're compounding their money. There was a lady that invested with me back in 2010. She was going through a divorce and she had a couple of kids, so she invested 250,000. She said, Cherif, I just want to make sure my sons, when they grow up, they can go to college. At the 250, it's more, I want to like preserve it. I know what you're doing. You're diversified with all these assets. You got some cash flow, you got cash outs. So let's see. I was looking at the statement that my CPA was preparing to send her, and her 250 now is close to like almost $700,000. Because she kept reinvesting the money. She said, I don't need this right now. I need it when they're ready to go to college. Her older son is going to college now. And it was like, that's unbelievable. I thought there's a mistake. And then I called him and he said, Cherif, she's been reinvesting every 6 months. The compounding is twice a year. And it's real compounding, not people telling you, if you stay in the stock market, you're gonna average. This is what you're getting paid. This is a promissory note. It's the real thing.